I think we can all agree that investing in pretty much all facets in 2022 has been pretty rough so far. There's a couple days left in the year and let's see where the indexes are at. S&P 500 is down 19.77%. The Dow Jones is down 8.54%, and then the Nasdaq QQQ is down 33.7%. And ever since the beginning of the year, it's pretty much been down and down ever since the first week of investing, and it's went nowhere since. Now we're going to talk about in this video some of my major predictions, including some of the big predictions for the companies that I own. Because if you didn't know, this is my portfolio holdings in my growth portfolio as of the time I'm filming on Christmas Day of 2022. So Merry Christmas, by the way, if you're celebrating. Congrats to you all. Hope you all had safe travels and a fun time with your family. But I'm going to make my predictions for where these companies will be at 1 year from today. On December 31st of 2023, I have this white little chart here clearing it up. I'm going to be removing that and talking about price targets here, including the S&P 500, where I'm going to guess it will be at a year from now. We're going to talk about the federal funds rate, where the overall economy will probably be going in 2023, in my opinion. We'll also talk about commodities and how that will be affecting the economy. But overall, it's going to be a fun one. And without further ado, my name is Jordan. I'm a millennial investor. And let's go ahead and get started by diving into many of these big companies and starting with my number one position. And then we're going to finish out with the S&P 500. We'll start with number one, Salesforce. But before we get into all that, we have to talk about today's sponsor, MooMoo. MooMoo is a new up-and-coming brokerage that is taking the world by storm. Commission-free trading, level 2 data, advanced technical indicators, earnings calendars to see the date of financial statement releases, and institutional tracking to follow Warren Buffett's portfolio are just a few examples of what MooMoo has to offer. With this being my first sponsor in the channel, I have fully vetted their company and stand behind their vision. MooMoo currently trades on the Nasdaq under ticker symbol FUTU for FUTU and is SIPC insured. If you sign up below using my special referral link, you can get anywhere from 1, 10, or even as high as 20 stocks for signing up when you use my special referral link down below in the description or in the pinned comment down below. Free stock amounts can be as high as $1,000, so sign up now using the link in the description or pinned comment down below. You would help support me and my channel by doing so and give yourself an edge in the world of investing. Thank you so much, MooMoo, for sponsoring this video. Now back to the content. Okay, everyone, welcome back. Let's go ahead and start by looking at my portfolio balance, which currently sits at $35,000 and change right now, and start with my first price prediction. Salesforce, right now, if you didn't know, closed at $129 on Christmas Day. Right now, it's a Sunday, the stock market's closed, but as of the last Friday when this closed, this finished out at $130 a share roughly. Well, I'm projecting that next year it will finish at $160. Now, why is that? The reason being, I think that Salesforce will continue to grow top-line revenue. Now, however, I believe it will start to slow that growth dramatically. This year, it grew 14.19% as of the most recent quarter, but if you compare this to the 2, 5, and 10-year rates, that's much slower than it has been. However, it is going to likely continue to grow at 10% plus year over year, and margins are doing quite nice. This company is talking about free cash flow margins somewhere in the range of 25% coming up here shortly within the next year or two, and I think that that's much bullish than many other people, including myself, were expecting. And so the catch-22 for this company is kind of like, hey, it's great, we're getting more and more profitable, we're still growing, however, albeit we're growing a lot slower. So right now, looking at this price at $130, I think that Salesforce, in my opinion, is just too low. Year to date, the company's down almost 50% just within the last year, and the company over a long track record. If you look at the 5-year basis, the companies went practically nowhere on a 5-year timeline. However, if you compare the timeline to where they're at today versus 5 years ago, you can see in the most recent quarter they did $7.8 billion, but if you go 5 years ago to the exact same quarter, you see that they did $2.68. $2.68 billion versus $7.8 billion is a far cry. That's over a 3x just in 5 years in revenue, and this is so far from where the company should be priced, in my opinion. However, I think these types of high-level growth companies are going to be pushed down likely throughout 2023. Speaking of which, in my next prediction going into 2023, Amazon, by the way, if you didn't know right now, currently closed at $85 a share, and it's much lower than I thought it would be getting at in 2023. But my prediction for 2023 for Amazon is a $100 bill. Why is that? Well, Amazon, I think, will continue to grow top line revenue, similar to Salesforce, basically like all of my companies. I think top line revenue will continue to grow for Amazon, and it grew 14.7% in the most recent quarter, but I think we'll start to see single digit growth rates throughout 2023. But the main reason why I think Amazon will not be a whole lot higher by next year, which is only about a 15% gain or so in the next year, which isn't amazing considering that the company is down over 50% just year to date in 2022. But if you look at their free cash flow, it is not going in the right direction. And these type of companies, ones that are losing money right now, are not in favor of big investors in 2022 when we're going into a recession. We're wanting free cash flow positive companies, companies that make money. And as of right now, while Amazon has a long track record of making money, they've unfortunately flipped the script from a company that was originally making $26 billion in profit in 2020. Now last year lost $14 billion, and this year in 2022, when they report their last quarter, are likely going to come up with a number much worse than that. Because just throughout the first 3 quarters, you can see at the first quarter they lost 17.7, 6.7 in the second quarter, 4.9 in the third quarter, and you can see that generally speaking, this company's already lost around 30 billion or so just within the first 3 quarters, and they still have one more quarter to go. So I think companies like this will still be out of favor. I think Amazon likely won't go much higher, and that's where we'll pretty much be at a year from now. That's my guess. That's my prediction. Next up, we have Google, and this company is pretty much the same in share price. It's slightly higher than where Amazon's at right now. It currently closed at $89 as in the most recent close. Pretty much the same price as Amazon. This company has performed better, but it's still down 38% year to date, and I predict that by next year it will be $110, performing a little bit better than Amazon, and here's why. While Google is a company that has slowed down their revenue growth, and their employee costs are skyrocketing. They grew 6.1% in the most recent quarter. This is a company that has 2 major things going for it. Its profitability is a lot more defensive than I think many people are giving it credit for. You see its all-time high free cash flow is around $18.7 billion. Well, if you look in the most recent quarter, they put up over 16, which is not that far off from its all-time high. It is down, yeah, you got me there, but that's still really high, and this company is holding up really well given the circumstances that they're operating in. Furthermore, I think a huge share buyback program is in order for Google. You can see it's starting to go down pretty dramatic here, and in the most recent quarter, they bought back about 2.2% of the company. I think it's very likely that just 1 year from now, this company buys back hundreds of millions of shares just over the next 12 months, which will help boost the stock price and help increase valuations, and obviously we'll need to take that share price up to factor in a PE ratio of about 18, which is where we sit at right now. So I think Google will likely see some resilience, a little bit better than Amazon, as their business model is well fitted for this environment, and I think 110 is likely where they'll end up around. Crocs, my next big prediction, and this one is probably a little bit more bullish than you guys would think, because I bought my position at 76, and today it's already up to $103, and I think that it will likely continue this trend of bullish sentiment as their revenue continues to hit record levels from their acquisition of Hey Dudes. Now, if you pull up the next quarter predictions for revenue for the Crocs company, it is projected in the fourth quarter they're going to produce about $900 million in revenue. I personally want to go on record thinking that they will crush that number, as well as profitability, as I have seen Hey Dudes around the holidays everywhere. Maybe it's just me, maybe it's just my niche that I'm in, but I've seen these bad boys everywhere. But this is the type of company that I think people don't value much because they put it at a forward PE ratio at 8.8, which is just insane. And I think honestly, with the rapid acceleration in revenue growth and the profitability expansion we've started to see for this company, and their new brand, which has seen awesome tailwinds for consumers, especially for younger generation, and their slow buyback of that massive debt that they raised in 2022, I think that this company's valuation and stock price will likely see higher yields in 2022, and you'll likely see me exit this position within the next year if that happens, as it's not one that I think is a long-term compounder, but it's more of a short-term valuation play. And then finally, the last thing I want to go over is, before we talk about the prediction for the S&P 500, I want to talk about the federal funds rate. You look at a normal winding up cycle. When interest rates are going higher, you see 25 basis points, maybe even 50 basis points at a time. Slow trickles up in interest rate. Look how violent this uproar in interest rates have gone. We've went from 0 to about 5% federal funds rate in pretty much a year, less than a year actually, so like 9-ish months or so. It is so impressive how fast we have gone up. It is absolutely ridiculous. And I think that this will likely reverse. I think the same thing can be said about commodities. This is a price chart for crude oil over time over the last year and a half. And you can see that we had the big ramp up from the war fears and inflation fears and all these different things that were going on. And we've seen a downtrend for pretty much 6 months straight now. I think I wouldn't be surprised if just commodities in general, not crude oil, but everything commodities, whether it's wheat or copper or crude oil or gold or really anything of the sort. I think that generally speaking, this will continue to go down as the federal funds rate has to go down because the economy is going to get worse. And this leads me to my big prediction for 2022 for the S&P 500. Now, SPY ETF trades at 382.91 as of right now, and I project that next year the S&P 500 will close at $400. Now keep in mind, when I give all these predictions, these are strictly just that. They're educated guesses. I could be completely off. I made the guess that S&P 500 will be 400. Next year, it might be 250. Next year, it might be 500. It might be anything in between. This is strictly a guess. And the same thing can be said about all these stocks. I said that Salesforce will be 160. It could be $300 a share next year. It could be $90 a share next year. I have no clue. I'm just making predictions and educated guesses based on where I'm at right now, and these could be completely off. Furthermore, I'm going to continue to show you guys my balance long term and track this over time and show you my performance hedged against the major 4 indexes, S&P, Dow, NASDAQ, and Russell 2000, but that's my predictions over the next year. I think that interest rates will come down 12 months from now. I think that commodity prices will come down 12 months from now. And I think the first half of the year will be rather bleak as the economy gets worse, and I think honestly it probably won't be till the back half of the year that the economy starts to recover from lowered interest rates, but I think that the S&P 500 will be slightly higher than we're at today. Which, by the way, in case you were wondering, if you take $383 and you add 5% to that, that's about a 400 S&P 500 roughly increase over the next year. This means that the S&P 500 in my prediction will only go up about 4 or 5%, which is not very high at all considering the average long term is around 7, 8, 10%. So thank you guys so much for watching. We'll see how these play out over the next year. But other than that, check out all the stuff down below in the description. Thank you, MooMoo, for sponsoring this video. But thank you all for watching, and I'll catch you guys next time.